Payroll tax problems can escalate towards criminal employment tax prosecution fast. Payroll tax problems don't stay accounting problems for long. When a business withholds payroll taxes but doesn't remit them, the IRS treats that money as trust fund taxes. Legally, you, whoever is involved, is viewed as holding employee money in trusts for the United States. Most states view it the same way. And once those funds are used elsewhere to pay other creditors, the risk shifts quickly here from civil enforcement and personal trust fund liability, which is bad enough, believe me, to criminal employment tax exposure. So let's talk about how payroll taxes create personal liability to start with. Employment taxes are different from almost any other type of federal or state tax debt. The IRS and most states don't just pursue the company, they pursue people they deem responsible parties, officers, employees, owners, anybody that's a financial decision maker who decides which creditors get paid and when. Anyone the IRS considers a responsible person, period. Job titles don't control this analysis. Authority over money doesn't control it. They look at who decided which bills got paid, who signed the checks, who knew payroll taxes were unpaid and paid other creditors anyways. That is where exposure begins for the trust fund recovery penalty. So, when payroll taxes go unpaid, the IRS especially can assess the trust fund recovery penalty. The trust fund recovery penalty equals the withheld federal income tax plus the employee's share of employment taxes. And here's the key issue: willfulness. Willfulness does not require bad intent here. It doesn't really even require fraud. It can be as simple as knowing that the employment taxes were due and choosing to pay some other creditor. Once assessed, the IRS can pursue personal assets, liens, and levies, and believe me, collection pressure escalates fast. So when do we cross over into criminal payroll tax exposure? Civil penalties aren't the ceiling here. They're the floor. Payroll tax cases can trigger criminal tax prosecution. Federal law makes it very clear that it's a felony to willfully fail to collect and account for and pay over payroll taxes. Also, federal income tax withholding. This alone carries up to 5 years in prison per count. But payroll tax cases, in my experience, rarely stop there. Once they're looking at you, prosecutors also evaluate whether tax evasion has occurred, if there's been false payroll tax filing, if there's been a conspiracy among multiple parties, if there's been false statements, if there's been obstruction. They look for these things especially when records are altered, communications are sloppy, or explanations change and evolve over time. So what are the common patterns that trigger criminal tax investigation over employment taxes? The IRS doesn't view payroll delinquency in isolation. They look for patterns. Common red flags include paying net wages while skipping deposits, cash or any type of off-book payroll, worker misclassification done knowingly, altered time records or ledgers, emails showing that creditor payment got prioritization, fixing records after the fact. Listen, your own words often become the government's best evidence. That's how criminal tax intent narratives are built. Outsourced payroll is not a shield. Many businesses assume outsourcing payroll eliminates all their risk. It doesn't. Responsibility follows control, not software. Even when a payroll service or even a PEO, the IRS can still pursue owners and decision makers. Outsourcing errors plus poor communication often makes cases worse, not better. California, or any state for that matter, also has payroll tax exposure. California, for example, adds another layer of risk. The Employment Development Department enforces California payroll taxes with its own civil and criminal employment tax statutes. Federal and state exposure here often move in parallel. That means more audits, more interviews, more chances for you to say something harmful. If you don't have controlled communication, cases can spiral quickly towards criminal. So in closing, when strategy and privilege matter, payroll tax cases are not just about what you owe. They're about what you knew, when you knew it, and how you went about explaining it. Once willfulness is inferred from your actions, everything changes. At the tax law offices of David W. Klasing, we approach payroll tax matters as potential civil and criminal cases from day one. We control communication, we protect privilege, we stabilize records, and we work really hard to keep civil problems from becoming criminal tax cases. If payroll taxes are unpaid or the IRS is asking who controlled disbursements, you need a coordinated defense. Call us today at 800-681-1295 or visit Klasing-associates.com to request a confidential reduced rate initial consultation online today. Thank you.